Ever found yourself scrolling through endless financial apps, wondering which one truly fits the bill? Maybe you've stumbled upon Ally, with its enticing interest rates and sleek mobile interface. But then the question pops into your head, is Ally a bank or a fintech company? It's a question many are asking, and honestly, the lines are getting blurrier by the day. Think about it. We live in a world where technology has completely reshaped how we manage our money. Traditional brick-and-mortar banks are facing competition from nimble, tech-savvy companies that offer innovative solutions right at our fingertips. These fintech firms have revolutionized everything from payments and lending to investing and budgeting. So, where does Ally fit into this rapidly evolving landscape? To really understand Ally, we need to take a little trip down memory lane. Ally Financial wasn't always the digital-first institution we know today. Its roots go way back to 1919, when it was established as the General Motors Acceptance Corporation, GMAC. Its primary purpose back then was to finance car purchases for General Motors customers. For decades, GMAC operated as a traditional financing arm, deeply intertwined with the automotive industry. Fast forward to the 2000s, and a significant shift occurred. In 2006, GMAC underwent a major rebranding, becoming Ally Financial. This marked a pivotal moment, signaling a broader ambition beyond just auto loans. Ally began to diversify its offerings, venturing into online banking with high-yield savings accounts and other deposit products. This move was crucial in positioning Ally for the digital age. Now, let's dissect the core characteristics of a traditional bank. Typically, banks are financial institutions licensed to accept deposits and make loans. They are heavily regulated and often have a physical presence with branches where customers can conduct transactions in person. Banks play a vital role in the economy by providing a safe place for individuals and businesses to store their money and access credit. They operate under strict regulatory frameworks designed to protect consumers and maintain financial stability. Think of names like Chase, Wells Fargo, or your local community bank. These are classic examples of traditional banking institutions. On the other hand, fintech, short for financial technology, refers to companies that leverage technology to improve and automate the delivery and use of financial services. Fintech firms often focus on specific niches within the financial industry, offering innovative solutions through software and mobile apps. They might specialize in online payments, like PayPal or Venmo, peer-to-peer lending, like Lending Club, robo-advising for investments, like Betterment or Wealthfront, or budgeting tools, like Mint. Fintech companies are often characterized by their agility, customer-centric approach, and reliance on data and algorithms. They often operate with lower overhead costs compared to traditional banks, which can translate to more competitive pricing or better interest rates for consumers. So, where does Ally fit in this dichotomy? The answer, as is often the case in the modern financial world, isn't a simple either/or. Ally exhibits characteristics of both a traditional bank and a fintech company. Let's look at the bank aspects first. Ally holds a bank charter. This is a crucial point. Having a bank charter means that Ally is regulated by the same authorities that oversee traditional banks, such as the Federal Deposit Insurance Corporation, FDIC. This FDIC insurance is a significant advantage for consumers, as it protects their deposits up to a certain limit in the unlikely event of bank failure. This regulatory oversight also ensures that Ally adheres to stringent capital requirements and consumer protection laws, providing a level of security and trust that might not always be present with purely fintech companies. Furthermore, Ally offers a comprehensive suite of banking products and services that are traditionally associated with banks. This includes checking accounts, savings accounts, money market accounts, certificates of deposit, CDs, and even mortgage loans and auto loans, a nod to its historical roots. The ability to offer these FDIC-insured deposit accounts firmly places Ally within the realm of a regulated banking institution. However, Ally's operational model and customer experience lean heavily into the fintech space. Unlike many traditional banks with extensive branch networks, Ally operates primarily online. This digital-first approach is a hallmark of fintech companies. By minimizing physical infrastructure, Ally can often offer more competitive interest rates on savings accounts and lower fees on other services. Their user-friendly mobile app and website provide a seamless and convenient banking experience, allowing customers to manage their finances anytime, anywhere. This focus on digital accessibility and user experience is a key differentiator that aligns Ally with the fintech ethos. Moreover, Ally has embraced technological innovation in a way that many traditional banks are still catching up to. They continuously update their digital platforms with new features and functionalities, focusing on user-centered design and intuitive interfaces. Their customer service is also largely digital-first, with readily available online chat and phone support. This agility and tech-forward approach are strong indicators of a fintech influence. Consider Ally's competitors. You have purely digital banks like Chime or Vero, which operate exclusively online and often partner with established banks to hold deposits. These are clearly in the fintech camp. Then you have traditional banks that are investing heavily in their digital offerings to compete, blurring the lines even further. Ally seems to occupy a unique space in the middle, leveraging its bank charter to offer traditional banking products through a predominantly digital, fintech-inspired model. It's also worth noting how the perception of bank and fintech is evolving. Consumers are increasingly comfortable managing their finances online and through mobile apps. The convenience and accessibility offered by digital platforms are becoming the norm, and traditional banks are under pressure to adapt. In this environment, a company like Ally, which seamlessly blends the security and regulatory advantages of a bank with the technological innovation and user centricity of a fintech, appears well positioned for the future. Think about the implications for you, the consumer. Ally's hybrid model can offer the best of both worlds. You get the peace of mind that comes with FDIC insurance and the security of a regulated financial institution, combined with the convenience, competitive rates, and user-friendly technology often associated with fintech companies. This can translate to higher returns on your savings, lower fees, and a more streamlined banking experience. However, it's also important to consider potential drawbacks. As a primarily online institution, Ally might not offer the same level of in-person service that some traditional banks provide. For individuals who prefer face-to-face interactions for complex financial matters, this could be a limitation. Additionally, while Ally has expanded its offerings, its history in auto financing might still influence some perceptions. With that said, thanks for watching, and until next time.